The mutual fund industry in India has clocked a staggering growth in recent years. However, despite this stunning journey, mutual funds still remain highly underpenetrated in India. A large part of India and Indians are yet to join the mutual fund bandwagon. Now, Edelweiss AMC has released a report detailing the role and importance of mutual fund intermediaries. Let's understand more about this report with Radhika Gupta, MD CEO Edelweiss AMC. Radhika, good evening. Welcome to the show. Always a pleasure to have you. And today we are going to talk about the role of mutual fund distributors. So first up, let me just begin with a very simple question and a very important question. What exactly is the role of a mutual fund intermediary, and how has it changed over the years? What's the entire landscape?
So I think, sometimes the word mutual fund intermediary is misunderstood, but a mutual fund intermediary is an individual or a firm that helps guide an investor with their mutual fund investments and broadly their financial planning. Now, over the years, a mutual fund intermediary could be a mutual fund distributor. MFD is the terminology. So they are individuals or firms or partnerships that guide investors through the process, or they could be registered investment advisors under the new framework that the regulator had adopted a few years ago. There are a few differences in both these in terms of how they charge fees and the way they operate, but essentially both are intermediaries that guide investors. And I think an intermediary plays many different roles in an investor's process. Everyone knows about mutual funds, but I always say personal finance is personal first and finance later. So the right for you may not be the right one for me. So helping you with your asset allocation, choosing funds that match your asset allocation for you, working with you on your goals, also your behavior in the kind of volatile markets that we see. I think these are some of the roles that a mutual fund intermediary plays.
Now, let us understand the penetration. Now, we all know that a lot of needs to be done over here, but then since we are talking about the change in time, so how has this particular role of a mutual fund distributor has led to deeper penetration of mutual funds in India, especially in tier 2 and tier 3, where we are seeing, a rise of awareness and also participation. So, how has the narrative changed over the years?
So one is that, of course, over the last few years, mutual funds as a part of household savings has risen. If you look at the last 4, 5 years, mutual funds are now almost 10% of the household savings. They were almost half this number. B30 as a market has grown substantially, and individual investors coming into the market since pre-COVID is probably up about 70%. So our industry has expanded, and the expansion is coming from equity, is coming from individuals. So I think that backdrop is extremely important to understand. SIP book of the industry is now 13,000 crores. And by the way, this is slated to expand further because India's investing population and young population is just getting larger and larger. Now, what role does an intermediary play? If you look at the breakup of the money invested in mutual funds, at least by individual investors, 80% of that comes through intermediaries. And when I say this number, actually people are surprised because while direct has happened and fintech platforms are there, etc., even today, 80% of the money comes through intermediaries. As our report says, 75% of the HNI money comes through intermediaries. So intermediaries are playing a very powerful role in bringing customers to mutual funds, keeping them in mutual funds, and also the penetration in beyond the top 30 cities in India, because mutual funds have really become part of pop culture and a public movement beyond the T30.
But then what goes into the entire model of, or a business model of a mutual fund distributor? If you could just explain this to us, because the distributor is obviously paid as per the number of client he has onboarded for this scheme for a particular AMC. Now, how would you as an AMC make sure it's a fair play game and relevant products, are sold to the investors?
So I think a couple of things. Let me just clarify the fee model. There are two fee models. A mutual fund distributor is typically when you invest in the regular plan, APA mutual fund. A mutual fund distributor is compensated from that regular plan by the AMC, hence the terminology mutual fund distributor. So if the AMC charges a total expense ratio of X, then some part of that X goes to the mutual fund distributor. there is a model, as I said, called registered investment advisor, where the registered investment advisor earns nothing from the AMC but charges the client separately. And both those models are prevalent today. I think you have to realize that whether it is a mutual fund distributor or an RIA, these people are entrepreneurs and they're building businesses, and all they have really going for them is the client. They don't have a large brand name going for them. So they really have interest in keeping the client above and all. And in my experience in this industry, I think for the large part, intermediaries do a very good job understanding clients, selling them the right funds, because honestly, if they don't, they won't retain clients. And most of these guys build businesses on word of mouth because they don't have very large marketing budgets. Of course, you also have to remember that from an AMC point of view, we are a highly regulated business. So what we can charge is regulated, how we can pay out is regulated. There are no upfronts allowed in our industry. So we are one of the most regulated industries in terms of how we deal with our intermediaries. And there are a whole set of regulations that we have to do due diligence on a recurring basis on the practices of our intermediaries to ensure that there is no mis-selling. So that is all there. But I think people also have a natural incentive to do good for their client because that's how they grow their business.
Let's talk about tech over here. How is tech playing a major role in increasing this particular side of mutual fund distribution business, and how is it helping AMCs?
So I think, look, mutual fund distribution is not an easy business. I think sometimes people don't realize that, if you're doing a 2000 rupee SIP, you're probably earning 20 rupees on that, which probably doesn't even cover your phone or courier costs. So it's an expensive business and it's a hard business to get up to scale. One of the things that can aid is technology. So whether it is platforms like NSU, MFU, which is the AMFI's platform, or whether it is platforms that the exchanges offer, I think technology plays a big role in making sure that servicing and onboarding of customers for an intermediary is more efficient so that they don't carry a large back office burdens. A number of intermediaries also partner with platforms, whether it's NJ or Prudent or many other platforms that exist, and they provide them a technology platform so that they can do transactions and run this business. But I do want to say it's not an easy business to build. It's not an easy business to scale. And until you have about 50, 100 crores of assets, the revenues aren't really meaningful. So it's also important, while tech will enable, it's also important that we find a way to make this profession more viable and have many more of these people if we want to deepen MF penetration.
How do you ensure that mutual fund distributors, give the right or recommend the right kind of products to investors? Because a lot needs to be done when it comes to financial literacy and financial education. So any kind of hand-holding or any kind of workshops that you give to your mutual fund distributors and help them understand the meaning of financial planning, or maybe the right approach towards it as per the investor?
Absolutely. I think a lot of things are done, not just at our level, but at industry level. One, I think there is very detailed training on each product, what the risks are to distributors. So if I'm selling a balanced advantage fund or a mid cap fund, we are having conversations and our teams on the ground are engaging with intermediaries on what the process behind these funds are, what can go wrong, and people do ask questions beyond product related training. For instance, we have a connect initiative. It's called Connect Classroom, where we do very extensive training for our intermediaries. It could be on financial planning, it could be on topics like fixed income, it could be on any topic. It could be on how to sell international funds, because for instance they've been a very big thing in the last 5 years. But what are the right ways to pitch international funds and what's right for their clients? So I think that happens. And the third is also engaging with intermediaries and their clients together. So many of us would have done client meets with the intermediaries. So I think the engagement between AMC and intermediary is an extremely deep engagement.
Do you think AMC is getting into the mutual fund distribution business in the coming future?
I think AMCs, look, represent corporate houses which may have different businesses. But I think AMC is a standalone business, and Chinese walls are extremely important in our regulated structure. AMCs will have investors who come to them direct, whether through their website or through fintech platforms. So to that extent, that exists. But as I said, even today, I mean, 80% of the investment that happens by individuals happens through regular plans and through intermediation. So while direct continues to be some part of a model, it's a smaller part for most AMCs than intermediation. And I think for most AMCs, their distribution network, I can say this for us for sure, is an extremely valuable one.
All right. I think that will be all. Thank you so much, Radhika, for being on the show and helping our viewers understanding the mutual fund distribution business today.